Welcome back to FXAUUSD, where we cut through the noise so you don't get chopped up in the markets. I'm Max, and today we're talking about one of the hottest assets at the moment, gold. With prices hitting new all-time highs and interest picking up around the world, this is one topic every trader should understand right now. If you'd like to swing to a specific section, you can use the timestamps below. But I recommend staying for the whole video because it's the dynamics behind gold's rise right now that are multi-layered and worth really digesting before you make any trading decisions. So why is gold so exciting and so expensive right now? There are a few big pieces to this story. First, gold is climbing because investors are seeking safety in the face of global uncertainty. Gold's rally over the past year has been historic, with prices surging dramatically as geopolitical risks have intensified. Conflicts in Eastern Europe, volatility in the Middle East, and fears about economic stability have all pushed investors toward what is widely seen as a safe haven asset. Second, the monetary policy backdrop has helped fuel this move. Expectations of interest rate cuts in major economies, particularly in the United States, make gold more attractive relative to yield-bearing assets like bonds. With interest rates expected to ease or remain lower for longer, the opportunity cost of holding a non-yielding asset like gold diminishes, encouraging more investors to increase their exposure to bullion. Third, central bank demands remain strong. Many central banks continue to diversify their reserves with gold as a way to reduce dependence on the US dollar and other major currencies. When central banks buy gold in significant quantities, it supports prices and reinforces the metal's role as a strategic reserve asset. Finally, safe haven demand isn't just coming from institutions. Exchange-traded funds and retail investors alike have contributed to inflows into gold-linked instruments, reflecting broad sentiment that gold remains a key hedge against uncertainty. Taking together these forces, geopolitical tensions, monetary policy expectations, central bank buying, and investor demand all create a backdrop where gold's traditional role as a hedge and store of value is very much in focus. So let's look at the structural trends in market psychology. Behind the headline drivers, there are deeper structural trends at play. Gold's historical narrative as a hedge against inflation and currency debasement resonates strongly when investors question the long-term stability of fiat currencies. In markets where confidence is shaky, safe haven flows tend to dominate. Large financial institutions are reflecting this in their forecasts as well. Some major investment banks have projected higher average prices for gold over the next few years, based on continued demand from both central banks and global investors, as well as expectations for further weakening of the dollar and continued macro uncertainty. It's also worth noting that gold's correlation with broader market volatility enhances its appeal. During periods of equity downturns or currency weakness, gold often moves inversely to investor risk appetite, something we've repeatedly seen in recent quarters as markets adjust to shifting policy and geopolitical developments. What does this mean for traders though? In an environment like this, gold isn't just another commodity. It's a signal of how markets view risk, inflation expectations, monetary policy, and even global power dynamics. When gold is strong, it often tells us something about where other asset classes might be headed to. But trading gold is not without its challenges. Gold can be volatile, and sharp moves often accompany major macro data releases or geopolitical headlines. That's why execution quality, reliable pricing, and platform performance are especially important for active gold traders in 2026. Your platform matters. Gold's volatility and price action demand a platform that can keep up. Fast execution, stable pricing feeds, and efficient withdrawals aren't just conveniences, they're essential when the market is moving as quickly as it is now. You want a broker that can handle spikes without requotes, delays, or slippage that eats into your strategy. That's why, if you're going to trade gold seriously, it's important to choose a respectable, reliable platform that you trust. So it's worth mentioning that I've been trading at Icon FX. The combination of tight pricing, smooth order execution, and straightforward operations have helped me focus on what matters, the charts, taking away all the other concerns and noise I might encounter elsewhere. Interestingly, and in light of the current Klondike-esque gold rush, we at FXAUUSD have managed to negotiate an exclusive free gold trade if you sign up with our link below for our happy and well-informed viewers. Like I said, a broker with competitive spreads and a solid track record make it easier to access volatility in gold without unnecessary friction. There are many brokers out there, of course, but this is a good deal for right now if some gold speculation takes your fancy. Final takeaway. Gold's run to new highs isn't random. It reflects genuine market forces, geopolitical risk, monetary policy expectations, central bank positioning, and investor psychology, all intersecting to make gold an especially compelling instrument right now. If you're trading gold, understand both the macro backdrop and the mechanics of execution. And make sure you do that with a platform that can actually support your strategy. See the link in the description for IconFX. If this video helped, give it a thumbs up, subscribe to FXAX, and let us know in the comments what you think the next big driver for gold will be. From FXAX, I'm Max. See you next time at the sharp end.